All right, welcome back. So this is the second video that goes along with step 5 of the accounting process. If you have not watched the first video about how to record adjustments, you need to stop this video and go to that one. You really should do that first before you do the closing entries. If you have already recorded your adjustments, then you are ready to do the closing entries, and which is the very, very last thing you do in the accounting cycle. So you are almost done with the month. Congratulations. Here's the items you will need. You need a blank general journal. And actually, I would just use the general journal that you started with those adjustments. There's no reason to get another blank one. You only had 4 transactions. You need your ledgers, the ones that have the transactions in them. You need the PowerPoint that has information about how to do adjustments and closing entries. And of course, you need a pencil. Go get these things, and when you're ready, you can start the video back up. Okay, I hope you have all of your supplies. So we're going to talk about how to do closing entries. And before we do that, we need to talk a little bit about what a closing entry is, why you do it, and a little bit about what temporary accounts are. So first of all, when do you do the closing entries? This is done at the end of every fiscal period, or for us, it's at the end of every month. The reason you do these is temporary accounts, which is revenue accounts, expenses, and drawing, need to be closed. And we'll talk a little bit more about why they need to be closed in a moment. And basically, this is going to allow all of those accounts to start fresh at the beginning of the next month, which is a good thing. You actually want to start with a balance of 0. So let's talk a little bit about these things called temporary accounts. In accounting, there are basically 2 types of accounts. There are permanent accounts, and there are temporary accounts. And the difference is that a permanent account is used to accumulate information that is ongoing in the business. These never get closed, and their balance just continues to go up and down throughout all the months and all the fiscal periods. Temporary accounts, however, only last for 1 month or 1 fiscal period. At the beginning of the month, they start with a balance of 0, and at the end of the month, you close them, basically making their balance 0 again. If you're wondering which is which, permanent accounts are those accounts that are part of the accounting equation. So that would be the ALO accounts: assets, liabilities, and owner's equity. Except, and this is a big except, drawing. For some reason, drawing is actually part of the temporary accounts. Speaking of the temporary accounts, which ones are those? They are your revenue accounts, which for us is sales, all of your expense accounts, and the drawing account. Okay, so how do you close these accounts? Well, basically, you just simply record a transaction that is opposite of what the current balance of the account is. So what that means is, for example, let's say our sales account currently has a balance of $1,000 as a credit. To be able to close that account, we actually need to add a transaction that would be a debit of $1,000. I chose debit because the balance was currently credit, so I wanted to do the opposite. And I chose $1,000 because that's how much was in the credit or on the credit side. So if I did a debit of $1,000, they would cancel each other out, leaving 0 as the balance. Finally, there is an order that you do these entries in. We are going to close the sales account first, and then we're going to close all of the expense accounts. And then we're going to move our balance from our income summary to our capital. And I know you don't really know a whole lot about why we're going to be using the income summary, but I'll explain that. And then finally, we close our drawing account. And then we're done. So let's get started. You can see that I have my general journal over here on the left. And you can see that the adjusting entries that I did previously are still there. And then I have my ledgers over here on the right. In fact, if I scroll up, you can see here's my cash ledger, and so on. So we're going to first start with the sales account, and we are going to close the sales account. We're going to do that over here on the ledger side first, and then we're going to record it over here on the general journal. So I'm going to go all the way down to my sales account. Here it is. Currently, my sales account has a credit balance of $5,075. So to get that to go to zero, I'm going to need to create a new transaction that does a debit of $5,075. And it will look like this. The 31st, because this is the last day of the month, debit $5,075. I want this number to equal this number. And I want to choose the opposite account. So since this is credit, I'm going to choose debit. Once I subtract these two, I'm going to have zero left. So to show zero, you can actually just put a line on each of the debit and the credit side. And that's an indication that that account currently has no balance. Okay, so I'm going to record that over here in my general journal. The 31st, this was my sales account. Once again, I don't have a document number. I can just leave that blank. And I did a debit of $5,075. Now, at this point, you're probably wondering, Mr. Manning, I thought you always told us that we had to have a credit transaction for every debit transaction. And you're right, we do. So we're not quite done with this particular transaction. We have our debit side, but now we have to do our credit side. And this is where that income summary thing comes in. You've seen the income summary line on the worksheet, and you probably have seen the blank account on your ledgers. The income summary is used when you're closing entries, or excuse me, when you're closing temporary accounts. And that's the only time it's used. So since I did a debit transaction on sales for $5,075, I am going to do a credit transaction in my income summary of $5,075. And since I had not done any transaction in that account before, that is also my new balance, $5,075. Now, I need to record this in my general journal. So I go over here, indent slightly, income summary, $5,075. All right, we are done with the first step. We just did our sales account. We're now going to move on to our expenses. Okay, so I need to close all of my expense accounts. Now, this sounds like a really daunting task, but the good thing is we can actually do all of these accounts in one transaction. We're just going to have several lines to show it in our general journal. So what I'm going to do is I'm going to actually scroll down or go to my expense accounts. And my very first one is advertising expense. And I am actually going to just go to each one. I'm going to do the 31st, and I'm going to do a transaction that is opposite of its current balance. So for instance, right now, advertising expense has a balance of $300 on the debit side. I'm going to do a transaction of $300 on the credit side. And then that makes that one zero. I am then going to go and do the same thing for insurance expense. $200 debit balance. I'm going to do a $200 credit transaction, making the balance zero. Miscellaneous expense. $750 debit balance. I'm going to do a $750 credit transaction, making that one zero. Rent expense. $1,800 debit. I'm going to do a $1,800 credit transaction, closing the account, making it zero. And then finally, supplies expense. $850 debit. I'm going to make that an $850 credit, making the balance 0. Okay, now I just closed 5 accounts, but I haven't recorded any of them over here in my general journal. So what I need to do is record the transaction to show that I had all of these credits in my expense accounts. Quick tip: when you get ready to do this one, leave this line blank. In fact, it's better to even just put income summary. Now, the reason I said leave it blank is because we currently don't know what number is going to go here, but the income summary is going to be debited. So we want the debits to come before credits. So I'm going to put income summary right there. And then underneath income summary, I'm going to list all 5 of those expense accounts that I just closed. So I'm going to start with my advertising expense. That was a credit of $300. I'm then going to do my insurance expense, a credit of $200, and I'm going to keep going all the way down. Okay, so as you can see, I have recorded all 5 of my expense accounts, and I have added in the credit transactions. Oh, and I've made just a little bit of a boo-boo. I need to put all these on the credit side. Goodness. Sorry, guys. I make mistakes too. Okay, now to figure out what I'm going to put in the income summary debit, I need to add up all of these credit numbers. So I'm going to add 300, 200, 750, 1800, and 850 to figure out what my income summary debit is going to be. Okay, so I added up all of my expenses, and I got $3,900. So my income summary is going to be debited $3,900. So I'm going to go up to income summary. I'm going to put a transaction on the 31st, a debit of $3,900. I currently have a credit balance of $5,075. If I subtract 3,900, that leaves me with a balance of $1,175 still on the credit side. Okay, so we just closed all of our expense accounts. We are now going to close our income summary account and transfer it into our capital account. And then finally, we're going to transfer our drawing account into our capital account. So to close our income summary, currently the balance is $1,175. I'm going to do one more transaction, another debit of $1,175, making this balance 0. I need to record that over here on my general journal. And the credit for this is going to be my capital account. And it's going to get a credit of $1,175. So I need to go up to my capital account, Brian Dawson Capital, put a credit of $1,175, making that new balance $16,175. Very last thing, I'm going to close my drawing account. Currently the balance is a $200 debit. I'm going to make it a $200 credit. And that also gets moved to my capital account as a $200 debit because I have to have an opposite transaction. Leaving me with $15,975. Very last thing, I need to record that over here in my general journal. So Brian Dawson Capital, $200. Brian Dawson Drawing, $200. And you're done. Congratulations.